drawing zones, and then we're also going to look at type of zones. So these are the topics we're going to cover today. So firstly, other types actually is supposed to be under basic, but I just felt it's nice. I have to cover it quickly before going into the other intermediate topics. So other types, now we have different kind of orders. When you, after analyzing your pair, you want to take a trade, there are different kinds of orders that you can actually take. We have the um we have the we have market execution. Market execution. For this particular market execution, the parameters you need, you don't need entry price, you just need your take profit and your stop loss. Market execution means I'm telling the market, I'm telling the market, let's say this is 1.08346. I'm entering at that price, at the instant market price. That's that particular price that is available. That's market execution, also called instant execution. So when you're trading, you're going to see, when you want to place a trade, you see different kind, you can select the kind of order you want based on your analysis. So you need to take profit and your stop loss for that. So once I enter, all I need to do is I'll put my stop loss if I want to buy, and then my take profit, my target. This is my target. I can say, okay, I want to take profit at this point. Then my stop loss can be here. I'll say, okay, this is my stop loss. Let me use red for stop loss. Okay, this is my stop loss. So I enter instant, and then the market moves, gets to my TP, and then I'll be closed. My trade will be closed out automatically in profit. Yesterday we talked about how pips and all that, the lot size you use can translate into money. So already taking my risks and all that, I know what I'm going to lose if the market goes against my prediction or my analysis, and then I know what I'm going to profit. So this is market execution. So the next one we have four other types. They are called pending orders. Pending orders, what you need for pending orders, you need your entry price, you need take profits. I'll just use TP is take profit and stop loss is SL. So you can see it anytime, you know that's what it means. So entry price, take profit, and then stop loss. Now, the pending orders, we have different types. We have the buy stop, we have the sell stop, we have the buy limit, and then we have the sell limit. So these are the orders we have. Penny order. Now I'm going to describe it using the chart. Now for the first one, which is the buy stop. All right, buy stop. This is the example. Now I did my analysis, but I don't want to enter at this market price. I don't want to enter here. I want to enter this trade when price gets here, 1.08397. So I'll place a buy stop. Okay, I'll place a buy stop order. I'll put my entry price. My entry price is going to be 1.08397. Then also I'll put my take profits here. Take profit 1.08558. I'll put the lot size I want to use. So when we start trading on the mobile phone, you see the lot entry price. When you select buy stop, you're going to see lot size, entry price, stop loss, and then you also see take profit. That's take profit. So now my stop loss will be here. So entry price and then take profit. Okay, then the next one is sell stop. Sell stop is just the reverse of this. So sell stop, this is my stop loss. Market, I did my analysis and I believe that maybe the market is coming down, I want the market to trigger my trade here, 1.08297. So I'll put a sell stop order. Then I'll put my take profit here. My analysis shows me that the market will sell here, and then, so I want to enter here. So I enter at 1.08297, and then this will be my take profit, and this will be my stop loss. Okay, so that's for sell stop and for buy stop. Then buy limit. This is how buy limit works. Buy limit is this way. I did my analysis, and I believe that the market is going to come to this point. Let me put entry price here. So this is the buy limit. So buy limit means my analysis shows me that the market will reverse here, get here, and then go back up. So I'm going to take a buy limit order. I'll wait for the market to come back here. I'll just take the trade, put in the parameters, and then once the market comes here to trigger my trade, get me into the market, and then it moves up, and then it takes profits. If it doesn't go in my direction, of course, it will hit stop loss. That's for buy limit. Then sell limit is the reverse. Sell limit, this is stop loss here. This is take profit. And this is entry price. So sell limit. So sell limit, my analysis shows that, okay, maybe price is going to, this zone is going to hold, something like this. It shows me that this zone is going to hold. So I'll take a sell limit order. Maybe I don't want to be, I'm not on my system, or I don't want to watch trade and all that. I'll just take a sell limit order. I'll put in the parameters, entry price 1.08513. I'll put my stop loss, and I'll put my take profit and place the order. Now it's going to be pending. Once market gets here, my trade will be triggered. I'll get into the market, and then price drops all the way down here, takes profit and closes the trade. So those are the different kinds of orders we have. So we'll go to the next one, which is identifying zones. Zones. We talked about zones yesterday. So now we're going to look at how to identify zones. How do you draw your zones? Okay, so now this is Euro USD. Now, we usually use the higher time frame for our analysis to look at the overall market overall structure, because this is what most institutional folks, that the banks and all, they call them the what they call market makers and all that. They look at this time frame daily, weekly, and monthly. Most intraday traders, retail traders, they trade with this time frame, 4 hour, 1 hour, and all that. So whenever I want to do analysis, we always come to mostly I come to the weekly. I only use the monthly. Once in a while I do, but weekly is okay. Monthly is just 4 weeks. That's 4 candles. So I mostly use the weekly time frame to check. Okay, so now remember yesterday we talked about the zone. We said this is our supply and this is our demand zone, and market moves from zone to zone. Okay, zone to zone. All right, so now how do you identify zones? Then we also talked about the kinds of this thing we have, what's it called, the kind of supply and demand. We talked about the drop base um, drop base rally, which is the demand. That's the V shape. That's this drop, then creates a base, then rallies up. Then we talked about the rally, which is the supply. Price rallies up, price rallies up, creates a base, and then drops. So now, how do we know the base? How do we draw our base? Before we look at the right way to draw a base, we're just going to look at the general way, as in, let me go to the daily time frame. It's easier to spot. Okay. All right. So now, for a zone, there are some things we have to look out for. We have to look out for the departure candle. There has to be like a strong departure candle. Now, when you see a strong move up, all right, with full body candles, not tiny, tiny candles, full body candles like we have here. Look at this one, 1, 2, 3, 4 here. Then we can actually say, we can mark out a zone. So for this particular one, there's a strong departure here. So we can mark this out as a zone. Now, when marking out zone, this, we look at we mark out for the body, we mark out that we're still going to cover the wick for this particular one. What's wrong? Let me see, sorry. So this is the zone for this particular, for this Euro USD. This is a zone. Okay. This is also a zone. This is also a zone here. We have a strong departure. Actually, this is the right zone for it. Now, we have, this is the zone. Now, we also have what we call continuation pattern. Now, this is going to be that CP, continuation pattern. This is going to, this is the base, right? We already have one base, and then any other zone above it is a CP, continuation pattern. So because price does not just move in the market, price does not just move like this. No, it's going to have some retracement moves, retrace, move, retrace, move, maybe like this and all that, you know. So that's how price moves. So this is the zone for this particular one, and then we have a CP, continuation pattern. It's also a zone, but it's called a CP. Once you have the first zone, which is the valley, at the valley, the next zone that will follow is a continuation pattern. So you can have up to like 3, sometimes 4. But once you have up to 3, 4, then you don't have to trade it again. That means it's going to start getting exhausted. So this is how to draw a zone. So the first thing we look out for a strong departure. Once you see a strong departure, then the opposite candle, if it's a bullish move, that's if it's a bullish move. Bullish means buy, bearish means sell. Okay, because of the animals, bulls they fight up, bears they fight down. So once you see a strong departure like this, sorry, you have a question? Thought I saw one. Okay, once you see a strong departure, you can look at the base. You mark out the base, and then you have your zone. Okay. Initially, it's going to look somehow, but with time, as you practice it, you find out that you'll be able to do it a lot. So we won't have assignments on this. So you're going to mark out zones after this class. All right. So now every time frame has its own zone. Every time frame has its own zone. The monthly has, the weekly has, the daily, and all that. So you're going to see zones everywhere, all time frames. Some of them are going to overlap, like this one we just marked out. This 4 hour is overlapping. Okay, so this is how to draw our zone. All right, so also this is the same way for, this is demand we're drawing. It's also the same way for supply. Now for the supply, if we want to mark this out, we're going to be looking out for, remember, we're looking out for a strong departure. So something that qualifies as a zone, this one, there's a strong departure here, you can see. So this also qualifies as a zone. So for this, you mark out the wick, the top. But for when price is approaching, that's the price, let me put it this way. the candle part, the candlestick part that is close to price, you don't mark the wick. You only mark out the body of the candle. So I'm not going to mark this up to here. This particular blue candle, which is the last bullish candle before the departure, the strong departure. So I'm taking this last bullish candle before the departure as my base. Okay, remember we said rally, base, drop. That's for supply. Then for demand, we have rally, drop, base, rally. All right, V shape for demand, and then inverted V for supply. Okay, after 10 minutes, I think this will be off. We'll log back in. So now I'm going to draw this like this. So for when you're drawing, like I said, to make it easy, the where price, the part that is close to the price, where price is approaching, you do not draw, you do not mark the wick, because price mostly, look at this wick, let me put an arrow, look at this wick, this candle wick, price mostly will not respect it. Okay, but you are going to cover the wick for the other side. All right, so that's your distal line. You're going to cover the wick up to the wick, and this is where usually, if you want to take a trade from me, this is where you put your stop loss above this distal line. So we have this zone here. Now we also have another zone here. This is what you call overlapping zone. You're going to see it from time to time in your chart. So we have another zone here as well, because why? It meets our requirement. There's a strong departure candle. Okay, then this one is also, like we said, this is also a zone, but it's called continuation pattern. Then let me look for other examples. This is the daily. Let's go to the up to the 1 minute. Okay, so there's a question here. Okay, up to the 1 minute, we have zones everywhere, zones everywhere. So we trade off zones. So look for strong departure. This is a zone here. This is a zone here. You know, so we're going to have an assignment after this class. You're going to mark out different zones that you see on your charts. Just forget about, because not all zones are valid. We're going to learn that's part of what we're also going to be learning. How, okay, which particular zone can we trade off? Which one should we not trade off? You know, stuff like that. You're going to learn all that. But I just want you to get the concept of drawing your base and your zone. What to look out for: a strong departure candle. Okay, look out for a strong departure candle. And sometimes your base can have up to like 3 to 4, maximum 6. You can have 6 small candles. You know, let me look for an example of that. You can have multiple. For example, this particular one I'm going to draw now, you can see it has this base, has like 2. So you can mark out 2, but the maximum base you should have should be 6. So you don't have to mark out more than 6 candles. That means you're going to be covering the necessary part of that candle, those the base, the different candles close to that departure. Okay, so the price where price is approaching, you cover just the body of the candle. If it has a wick, you cover just the body of the candle. If it doesn't have a wick, you cover that means just the body. Like this one doesn't really have wick, so we are covering. Let me make it bigger. So we are covering just the body. Okay, cover just the body. That's all you need. So the red candles, the red candle before the departure forms our base. Okay, so this is it. Okay, so we have this is also another one. This is also you can see where there's strong candle here. This one you cover the wick. This is the base. These 2 candles here. Drop, base, rally. Drop, base, rally. Okay. Do we get this? If you have any question, you can ask. Because this is the key to taking trades. So let me show. Okay, I think there was a trade we took today on our group. Let me check. I think GG. I hope the markup is still there. I took a buy today and it was just off, I think, a continuation pattern. Okay, we already did our analysis and we know that this pair is already bullish. We're expecting price to hit this particular zone. But of course, like I said, price is not just going to go up. It's going to retrace, move, retrace, move, retrace. So this particular one, while it's moving up, is going to give you different opportunities to enter the same trade. So we took this one here, we traced here, and I think that was in 5 minutes. Okay, the 5 minute zone we used. Okay, this was it. This particular one, I'm gonna during course of training, I'm also going to explain why this particular one, how do we know that price was going to come back here? I'm going to explain why this particular zone was chosen. It's called a strong zone. The characteristic of a strong zone. So that's it. I believe we all understand this, right? So that's just so what you're going to do after this class later today, for our next class, you just look at the chart, draw zones, any zone you see, just draw it. Take out your base and draw it. Take out your base and draw it. So that's identifying zones. We've also covered the topic drawing zones. Okay. All right. So now we'll go to one very important thing, which is types of zones. This is very key to a successful trade or a failed trade. Now, people can understand supply and demand, but not a lot of them know that, okay, there are some rules behind. People just mark out zone, and when price comes in, they just sell, they just buy. No, there are some zones that you should not trade off. There are some zones that you have to trade off. So now, types of zones. We have strong zones, we have weak zones. Now, the definition of a strong zone, let me type out what to look out for a strong zone. Now, this particular zone must take out an opposite zone. So if it's a supply zone, it must take out an opposite demand zone. Okay, take out an opposite zone, supply or demand. So we mostly trade off strong zones. We mostly trade off strong zones. So now let's look out for, before you, okay, the weak zone, of course, weak zone is just a weak zone. Um, hasn't, or which English should I use now? Weak zone, no demand, no opposite zone, supply or demand taken out. Okay, so we're going to look at our chart and identify some of them. Okay, so we have that. Then let me look at for. Okay, let me go to the 4-hour time frame. Okay, so now let's look out for a strong zone based on our definition. Now, this is a zone, right? This is a zone because of this. We have a strong departure candle, so we can actually mark this. Now, I have to mark this. Why? Because this is also part of it. This is also my base. Okay, this is a base for a demand. All right, now because price is moving, I'm looking at this as a continuation pattern. All right, I want to take a trade. Let's assume this other part has not yet happened. Let's assume this part has not yet happened. This whole part we're seeing here, let's assume this part has not happened. All right. Now I take this out. Now the trade, remember this is not the origin of the move. This is from here also, from somewhere here. But I want to enter a trade here. So I'm looking out for, I have to enter off a zone. Okay. Now, what kind of zone should I be looking out for? These are the qualities I look out for. After marking my zone, I want to look out, did it take out this move now, this particular zone, did it take out an opposite, an opposite zone? I'll look out for it. Did it take out